The following is a presentation of TFNN. Live at TFNN, The Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. Right now, we get the Dow down 37. Nasdaq's off 17. S&Ps are off 3.5. We have gold off 11. Silver's off 53 cents. Platinum's down 13. We get oil off $1.26. Larry's getting his life jacket. We got bonds up 28 trading at 147.24. King dollar up 33 ticks, 79.73. We need more juice than that, but it's a start. Euro down 7 ticks at 129, and the yen off 17 at 78. Apple didn't sell their 10 million phones.
They did not. Only 5 million.
5 million.
Only 5 million.
5 million. And they absolutely blew it with the maps. Okay,
that's what I hear. Yeah.
It's going to get interesting watching. When David and I were on Friday, David brought up some of the maps, right?
Oh, did he?
Oh my God! Let me tell you, folks.
Okay, so on the internet or something, they showed you some of the.
People were sending them across. Okay, it's dramatic. I mean, it's to the point that you could be driving and they'll drive you right into the ocean. I swear to God, he drive them right into the ocean to get to a few places, right?
Oh, I love it.
And you know where the problem comes in, folks, is this. Years ago, that would have been a problem. That's a huge problem now because of the fact that so many people use them all the time.
Yeah.
You know what I mean?
Yeah.
You
and I, we traveled around. We wanted to go to a restaurant or something, and, in your Android device, you put it in.
Yeah.
Because on my Apple device, that I had back then.
Right.
It didn't tell you where to go. At least yours, you were saying, hey,
it talks.
Turn left.
Eileen talks.
Yeah. Which was great.
Yeah.
So, you use them. In fact, they're as good or better than the devices in your cars.
Oh, there's no doubt, man. It's
of course not the Apple one, though.
No.
There's a cool commercial I saw yesterday. It was Samsung really attacking Apple.
I saw it.
Did you see that?
I saw it.
That was the first time I saw it.
You were watching football. That was in the football game.
I was that was a funny.
It was already here.
It was really a great. It was a good ad.
Well, I'll tell you, I got what do I have? One of those. I forget what kind of phone I got, but anyway, I got an Android device. Oh, it's a HT something. Okay.
Yeah.
But I'm looking at that Galaxy, man.
No, I would think that you would. I would think that folks that are on that platform,
exactly,
they would rather migrate over to something like that as opposed to the iPhone.
Right. No.
I mean, just
I can tell you this flat out because of those maps.
Yeah.
They call Angie and I Mr. and Mrs. McNally, and that's folks because we absolutely need those GPS devices.
Hey, it's been the best thing for a guy.
Oh my God! Let me tell you.
You don't hear, honey. You're sure you know where you're going?
No, I'm always asking her where I'm going. That's why I call her Eileen because I lean on her.
I love it. Well, Apple's got other problems. Apparently, the map factory is burning down in China.
Oh, I saw that.
I don't know exactly what that's about or whether it's iPhone or Apple related, but
well, I'll tell you.
And Apple traded off this morning. First, moved down, gapped down about $12 or $13, but really ran right into an area that's support. Now, moved down with some volume this morning, but
so we got. Let's see. So let's pull this baby up. See what we got here. And it's so wild. So check this out. This morning. And this is always typical. Sometimes you can basically just throw everything out the window and just wait for the headline to come across.
Yeah.
So in the Wall Street Journal today, they did a journal in the New York Times. Will Apple be the first trillion-dollar company?
Oh, yeah.
So I saw that.
It's always the death.
Totally. Right? I saw it this one. I says, oh, man, that headline. You know what I mean?
I think you got to wait till it gets that till it's on the front page of Barron's, though, right?
Probably.
Right?
Yeah,
it always used to be Barron's.
Probably.
Barron's was the death.
No.
And
Time Magazine, right?
Just a couple of them out there that were always classics.
I know. How does that work, man, right? Think about that for a second. That's really
late
wild.
to the party. Late to the party.
Okay, check this out. I'm so glad you just said it. You talk about late to the party, folks. You want to hear something amazing? So check this out. GE.
Yes.
Okay. You know what GE's new business plan is?
No.
Not new business plan, but what they plan on doing? Mining business.
Really?
Swear to God. Come across this morning. Okay, so check this out. GE is preparing to buy more mining equipment service companies as it creates a new unit using a blueprint for doubling oil and gas revenues in the next 4 years. So they're going to put $5 billion. Now, this unit here, folks, is over in Australia.
Okay.
But when I saw this, I says, this is a classic. You know what this is almost like? This is almost like, folks, you got to check this out. This is amazing. Okay, so I started the Gold Report in 2001.
Yeah.
Merrill Lynch always had the best commodity desk. They closed their commodity desk in 2001 at the beginning of the bull market.
How about that? Yeah.
They reopened it 5 years later.
Yeah.
Okay?
Yeah.
Bottom line is that when I saw GE, I said to myself, no, GE's in the heavy equipment. There's no two ways about that, folks.
Yeah.
But the bottom line is that this is not the time, okay? In Australia, they're going on Australia because the sector has got decimated.
Yes.
That's the bottom line. But that just says to me, man, you know what? They're chasing the tail.
Yeah, yeah.
Big
Now we get the new component in the Dow, right? Kraft is out, and United Health.
UNH.
I think, or is that who's in it? I don't
no, that's right.
Yeah,
that's right.
Okay.
Yeah, that's right. You know, she's
not having any impact though. If that's the case.
I believe Friday they bought a bunch of shares.
Yeah.
You know, but we're trading. It's trading at 56 right now. Man, she's got too much volume downtown.
Yeah.
You know, look at that. I mean, would you have downtown last August was monster volume, downtown July was monster volume, so that consolidation will stay in place.
Yeah.
You know. There goes the bonds.
Yeah.
The bonds are taking off. The USZ.
Yeah, they're up at the high of its trading session, for sure. And look, after 9 straight days down, I mean, this thing, just never stopped. Of course, you could take a look at it. Had about 8 or 9 trading sessions on the way up to the last time. Coming out from August 20th all the way up to the high that was put in on September 4th. So kind of interesting. I actually hadn't really even paid attention to that. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, 9 days up, 9 days down, basically.
Isn't that cool?
Yeah.
Now, the bonds, folks, the 30 is at 147.28. It only has to get back inside 148, and it's at the top of its consolidation. So that's going to get really. There'll be some action there. Some of the, man, you're showing me a couple of these.
Yeah. On the pharmaceutical side. Quest, really both of them.
Questcor is down another $9, folks. This is the equity. This thing's going to go BK. I mean, this is a mind blower, actually.
Yeah. Well, when you take a look at what it's done in such a short order. Of time.
4 trading days, 50 to 21.
Yeah. And and even before that, I mean, there's folks that are still in this thing.
And now
that's really sad.
Now what they're reporting this morning, folks, is that the government's investigating them. Now let's see what let's see. Questcor is dropping. What's the investigation about? Most in 20 years. So it's a company that's been around for a while. Today's far Questcor.
How far does your stock chart go back on them?
I can get it back. Let's see. We will go back. I'll just bring it back to the maximum. Let's see. We'll do a monthly maximum. See what we got. Well,
but to talk about building cause.
Yeah. It built cause and then went parabolic. So, folks, the stock was 60 cents in 2007. Built some good cause and has volume.
Well.
No, it's sold off. Now, if you can learn anything from this equity, is that this was volume off the high. You sell off volume. See, someone always knows something, man.
Yeah, and you go back to what in July?
They sold off 58 to 38, volume off the high, and then now you get follow through.
Yeah,
this is amazing, actually.
Yeah, so it says it's going to go all the way back to $6, but it's somewhere between $1 to $6.
Yeah,
which is,
my God.
Yeah.
Devastation.
And then you got the other one out there. You got Peregrine Pharmaceuticals.
Yeah, that's
you know, that one.
That's
is
down
off
75%.
Yeah, PPHM is that ticker symbol.
I'm trying to think if that was. We had a couple people call me with pump and dumps the last few weeks.
Yeah.
I don't think this was it, but
yeah.
You know, because it was an over-the-counter stock. So this one here, I think, is a NASDAQ stock. Yeah, no, this is a NASDAQ stock.
Yeah. Still.
Bottom line is that
absolutely
devastation. Now, what you can get out of this, that already finished. That had an ABC up. It finished it, went buck beyond it, you know, with no juice. And these are, I'll tell you, folks, when they finish an ABC up and then you get to a higher high and the volume drops, you got to get out of the way, because this dropped from 8.2 million from 29.
Yeah. Yeah.
And it's like, and this has to do with, I think, a multiple sclerosis drug that.
Oh, I think they gave out some bad data.
Is that what it is?
Yeah, I think it was some.
Oh my God! Unreliable lung cancer trial results. Oh, great.
Yeah.
Fraud.
Yeah.
Oh my God.
Yeah.
Sick.
Yeah.
877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, gold. Let's go over to the gold market. Now, there's divergence out here, and check out, this is pretty cool. So for all you gold bulls out here, you're going to love this, because this is going to get really wild, and this is what it is. In the gold contract,
yes,
and the silver contract, right?
Yes.
There's not enough juice, folks, to break the last September, December of 2011, and March of 2012, okay? It dropped off dramatically, okay? That's the bad thing, right? Well, guess what the good thing is? The equities.
Yes.
The XAU, the HUI,
yes,
they just finished their ABC up, but they finished their ABC up with explosive volume.
Yes, yes.
Now, which is really cool here. This is how this goes, folks. When you have divergence like this, most of the time what you're going to see is this. You're going to see the contracts get slammed.
Yeah.
Right? The equities are going to pull back, but let me tell you something. They're a buy.
And some of them are going to be pulled back with lighter volume.
Oh, no, they will.
You know?
That's the correlation.
Yeah.
But there's going to be a little vengeance on the deal.
Yeah.
Do you know what I mean? But I'm telling you, I love it when not only that you have divergence, but what you need is this, folks. You need the conviction, and the equities had the conviction.
Yeah.
Okay.
Well, finding divergence is really a cool thing. I mean, that's what people should be. I use mining for. We're talking about mining stocks,
right.
But really, you should be looking for those types of divergences.
Big time.
And understand. Because that's where you really do learn something, and it helps you also to be able to set up a trade.
It does, and they're easy to get into because no one's going to want to buy them.
Yeah.
Whatever's going to happen here, no one's going to want to buy them, and it's dramatic. Let's go to our man Rick in British Columbia. Hey, Rick, what's going on, brother?
Hey, really good. How are you guys doing today?
We're doing dynamite.
Tom, I really like the fact you brought up RGLD a week or two ago. Maybe you actually, I've come to think of it, I think you're kind of using it as a bellwether for your...
I am. Hey, you stay right there. We'll get our heads wrapped around it. That's Royal Gold. This is Steve Rhodes, Tom O'Brien. We got our man Rick from British Columbia. We want to hear from you folks. 877-927-6648. You stay right there. We're coming right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, we have the Dow Industrials down 48, Nasdaq's off 23, S&Ps are off 5. We're talking with our man Rick from British Columbia, and we're going to be looking at Royal Gold, RGLD. And Royal Gold, folks, has been the performer, period, in the gold market. And when you talk about business plans, they got it in spades. You know, Royal Gold has all of 19 employees. Okay.
You know, Tom, my wife went out east, so I went to Prince George to pick her up.
Yeah.
She doesn't like going on the small planes. So anyway, I'm there in Prince George at an airport, and there's a mine called Mount Milligan, and it's north of Prince George. Prince George is a city of 100,000 in the center of our province, kind of the hub for the north.
Okay.
So anyways, I'm talking to this guy, and he's in charge of the steel work, and there's 900 construction workers up there, and like they're building a big settling pond, which is like a small lake.
Yes.
So that the toxins go in there, but the lake's sealed off, so it doesn't go into any water.
That's
system,
right. They put a big thing underneath it to start. Yes.
And it's so to make a long story short, they're low on cash. So just after I'm talking to them, I go sit in my vehicle. I'm listening to the news, and Royal Gold gives them about 12% more money. In other words, now Royal Gold, when this mine becomes a mine,
right,
is going to own half of it.
Right.
And I'm like,
how is that? Huh? I know.
Does that play into what they do or what?
Now, what should they do, folks? The way their business plan goes is this. And what has happened is that because at the beginning of the run, everyone thought that the way to go is, mine, get the stuff out.
Yes.
What Royal Gold figured out is that, no, they're not going to have any expenses. They're going to act as a bank, and they're going to get the royalty. And what they did, folks, is that they took the royalty on a sliding scale. And on the sliding scale, what ends up happening is that they have some royalties out here at $350, at $400, meaning that every single time that it got to a higher price, they actually got more money. Okay?
Yeah.
So what happened is this, is that the expense ratio inside the mining went up so dramatically that the miners themselves haven't been able to get the price. Where Royal Gold is that it's just like a tax, and they take it off the top. They don't have to worry about any, accounting mechanisms. They don't have to worry about expenses. You're selling your gold out here at $1,700 an ounce. Well, guess what? They get a percentage off that full amount. Isn't that wild?
Yeah, that's nice.
It's really it's so hard to comprehend. Like, you're not actually buying obviously a mine, but they're like, when you own them, it's like, okay, what am I owning? Like,
Well, I've seen. You know what you can do if you want to have some fun, folks. If you want to have some fun, what you can do is this, and it'll blow your mind. And I did this. You can actually go into their filings, right?
Yeah.
And you can pull out the filings, and you'll see what the scale is of the companies and how it works, right? And what you'll see, and this is where the real wild part of it is this, is that you'll see the different companies, and you'll see the scale up on some of them. So there's a scale down on others, after so long. But you'll see different price points when they hit, how much more that Royal Gold can bring to the bottom line. And it's crazy. I mean, it's, so.
So anyway, I see Royal Gold, like, if you put it on a 2-year, and I want to correlate this with the fact that I heard Thursday, or was it Wednesday, I think you mentioned, that this FTSE's not finished going up yet either, possibly. Is that correct?
Well,
Didn't you say it had volume, so forth?
That was the DAX, I believe.
Oh, the DAX.
It was the DAX, because we were following the DAX, and, the correlation is pretty good with the DAX, and the DAX has volume up at these highs,
Yes. So I correlate that with because, because I think the euro, doesn't the euro have volume at the highs, recent highs as well?
Well, to me, there's no such thing of volume.
There's no way to track it. But what I can tell you is that the large banks out there, the large commercials, have flipped their positions from net short to being net long.
Okay.
So there is some energy behind the move.
Okay. Well, anyway, I see a nice inverted head and shoulder formation, and I'm maybe you can stare and you can see head and shoulder, but on a 1-year chart on Royal Gold to take it to about 100, 105. And then, like you always talk, Tom, the real price of the stock, this thing can come back to $80 where it'd be a buy. But
it's way too extended. Right? Exactly. Yeah. And this is telling me, see, this chart, folks, okay, is a nice-looking chart, but it's problematic in the sense that the pullback would be pretty vicious, which totally makes sense, though, because the that's just
that would be a heck of a nice buy at $78.
Oh, it is, and that's how these commodities like to run. I mean, that's the bottom line.
Okay, and this is the last one because I'm trying to get an overall picture with the DAX thing. Maybe you could talk about FCX and see if that thing doesn't have to get tested up at 44 again over time too.
FCX, is that what you said?
Yeah.
Okay, cool, man.
Thanks, man.
Have a great one. Have a safe one. Steve Rhodes, Tom O'Brien. You stay right there, folks. Come right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act as space is limited. Sign up today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
I'm O'Brien. Appreciate you growling and prowling out here with us. Right now, we get the Dow off 34, Nasdaq's off 20, S&Ps are off 3. And folks, if you haven't signed up yet for your Nadex account, come over to our website at TFNN. You're going to see the banner right on the top on the right-hand side. You can sign up. Put $25,000 of funny money into your account. If you happen to be in the Florida area, come this Saturday morning. Nadex is sponsoring a workshop, Daryl Mott and myself, 8:30 to noontime at the Grand Hyatt in Tampa. It's going to be a great education. If you happen to be listening to
Friday
show.
Session. Yeah, it was a great session.
It was pretty intense because
and we used the teamwork of 3 people.
Right.
During a break, I was mining for some trades. What I was looking for, especially on the Nadex platform there, was looking for things that were extended.
Exactly.
And I was really looking at a shorter-term time frame, too, because it was a Friday show. Market's going to be closing, so looking for things that were extended, was gold and silver, that there were a couple reasons why it was extended. It made a 1.272 expansion of swing points, so that's one way. I was taking a look at a couple of other indicators out there, handed it off to you. You were in that stage. Then the Daryl was looking for what was the best trade setups with inside the
that's right, because you want
the
them
binaries, the bull spreads.
Right. Because you want them at either the top of the box or the bottom of the box. And sure enough, this happened to be right near the top of the box.
Yeah, and what was great was that, so we identified the trade. You took a look at it as well, contract-wise. You're like, okay, this makes sense. Let's pull the trigger here. And then, what was nice was Darryl was navigating through the Nadex platform.
Right.
Okay, and he's got enough experience, obviously, with that.
Right.
To say, okay, we had given him the target of where it was going to pull back to, which was like 1776. And again, just looking at an intraday, I don't remember if that was the exact price, but it's on the archive.
It was.
So
No. You said
and sure enough, we come back from break, boom, it hit it, and, we were in, we were out, and a nice profit there.
And, the amazing thing...
And great reward to risk. As I recall, our risk on that was tiny.
The spreads, get your head wrapped around them, folks, because you don't trade them in the middle. And there's always something that's off to the tops and bottoms, too.
Yeah.
And what's neat... Particularly what we do at TFNN, depending on how long you've been here, what ends up happening, when you're here for a while, you'll understand how to trade the equities, trade the futures, trade the currencies. Doesn't matter, because it's all the same deal.
It really is, yeah.
It
totally
is.
Whether it's volume, whether it's expansions, that's right.
Right. It's just a vehicle. It's just a vehicle that, you're going in, going out of, and making a, probability.
Yeah. And they're always there. And that's actually the cool thing on the Nadex side, is that what you can do here is intraday, you're using those same techniques, and so then you can go down to a 10-minute, a 5-minute, 30-minute charts to have out there and find those types of opportunities.
No doubt. No doubt.
So it was, cool.
It's going to be interesting out here today, man. I mean, it looks like it's going to be flat again. They get it going, and then it just flattens out, folks.
You know what I pointed out in my newsletter this morning? If you took a look at all of last week, the closes of the S&P were within like about 2 points.
Right.
You had some intraday volatility for sure. You had markets.
That's dangerous to you bulls, though.
It is. It's not necessarily good.
That doesn't supposed to happen at highs.
Now, actually, what was really cool was
those Hans.
What was really cool was actually, as you took a look at Friday's action, and David really pegged this one, where he was taking a look at the unexpired options out there for Apple.
That was amazing.
And said, okay, this thing ought to close right around $700, and it was 700.10.
Yeah,
we had the most number of options expire worthless.
No doubt.
So knowing that, actually having that piece of information, with the market moving up or gapping up that morning, that putting those pieces together on, that was pretty
big time.
I was watching that coming to the close. I'm like, nah, this can't be.
I know.
700.10.
Seriously.
Yeah.
With a $700 stock, mind you.
I know. No, exactly.
That's where it goes over the top. There's no doubt about it.
Absolutely.
Let's take a look at some of the large caps out here. Big Blue down 68 cents. Honeywell's down 62. You get Big Mac off 18. 3M's up 20. Let's see. Coke's up 11. Oxy is down 67. Oh, United Technology, that's interesting. Oh, what is that one on Amazon? AMZN. So, that's not much either.
Yeah.
Only 918,000 shares. Oh, but, well, we'll see.
It looks a little
none of these
there,
excuse me, FedEx. So, here we go. This is going to be interesting, too, because, we're talking about the transports, and the key here, folks, is that either the transports are wrong, and as Larry said, that would be the buy, or the Dow's wrong. One's or the other. Now, the transports are coming back. So,
yes. Well, actually, when I was taking a look at the transports, they're coming into a couple of nice candle patterns.
Okay.
So they were coming into a couple of Morningstar patterns. So they're coming into an area that should really act as some support out there. So we'll see what happens.
Yeah.
Obviously.
No
but
doubt.
there is divergence. We were talking about divergence and being able to take a look at it from a trading investment type vehicle out there. And that's where the real divergence is in the marketplace is inside the transports, because you have the Dow moving to higher ground without the transports. And that you typically don't see. In fact, I put my charts up on a longer term basis, went back to try to find the last time that happened. I couldn't really find it.
No, you can't.
You know,
we can do it right now. Yeah, watch. If we put this up, I'll go back. We'll go back 25 years. So if I'll take this, I'll go back. I can go back 30 years.
Yeah.
So I'll go back 30 years, and then I'm going to compare it to The transports, TRAN, index, go, update. If you're in your car, we'll explain what you're looking at here. And it's about, well, hey, look at this. This is kind of interesting. Whoa. Hey, I'll tell you what is interesting here. Holy cow. Okay, so check this out, folks. In 1999, the transports actually gave the signal what happened there. So check this out. So in 99, you had the divergence.
Yes.
The transports went south. Now check this. This is pretty intense, actually. The transport started going south in April of 99.
Yeah.
Got to a low all the way in January of 2000, and the Dow was still at highs.
Yes, yes.
And then it croaked.
It went on for a period of time.
Oh, huge.
Went on for quite a period of time.
Huge.
Yeah.
But you know what? That's going to be happening right now. So that divergence, folks, the Dow is at highs. It stayed at highs.
Yeah.
And did not croak for, oh my God, is that a year? Oh, it is.
Yeah, it is.
April,
It is probably.
April of 99, and it didn't crack until July of 2001.
Yeah.
I told you it was going to crack. And that's when the Dow went from 11,500 to 7,100.
Yeah.
That's a good heads up, man. That's a good heads up if the transports continue to be low, folks. Because that's writing on the wall.
Yeah.
That's what it comes down to. And since that point, okay, and then what also ended up happening was this, is that then they hooked back together again in 2003. And they've been hooked together since 2003. And then prior to that, I get this back to 1987, and they were hooked together.
Yeah, yeah. Now, what I showed from a divergence standpoint, I don't have it here right now on this system. But what I was taking a look at was actually GE.
Okay.
So we were talking about GE earlier.
Yep.
And what I shared with folks on my 9 o'clock show on Friday was a divergence that GE is really, it's only about 1.5, less than 2% of the total weighting structure inside the Dow.
Okay.
But what GE will actually do is it will be a leading indicator that the Dow wants to turn.
Okay.
So it starts leading the market down, but because it's such a low weighting out there, it doesn't actually have much of a impact on the actual Dow.
Right.
And so if you pay attention to GE, it'll start leading down, the Dow will continue moving up. And and when you find those out there, that's your indication that it's going to crack. Now it doesn't tell you when.
No, I'm with you.
Okay,
I'm with you.
But it's enough of a divergence out there to start planning.
It is.
And to be looking for maybe some other signals, other patterns that are out there.
Yeah, for the confirmations.
And what we have, as you can even see right now on your screen, what you've got right now is you've got GE moving up higher as well as the Dow moving up higher.
Right.
So I'm saying that indicator there, and it's really worked well.
Yeah.
And I don't know why it works like that. It just simply, has worked.
Yeah, that makes sense.
But it's always good to look at, in my opinion, I'm always looking for those divergences out there. It just makes it easier to get your head wrapped around.
You can learn more from them.
Yeah.
You absolutely can learn more from them. There's no doubt about that. There's no doubt about that. This is going to be, let's see. So Apple's done 9 million shares. It's made a high with 11. This is problematic for Apple right now. What you don't want to see, folks, is that the correlation, because Apple's already proved that it can sell off with volume. The real question is going to be, what is the volume sell-off? Now, what really gets wild here is that, is it going to get back inside that 683? Because then that puts it into a different ball game. It's not danger point until 644, but because you're still when Apple broke topside, folks, which was in August, that's on a whole another level. The level there is over 644. So
well, even with their map problems and selling 5 million phones over a weekend, that's pretty good.
Oh, it's huge. It's huge. I think the map problem is going to be a big problem myself, but but just because you're talking. Would
that have happened on Steve Jobs' watch?
I don't think so. You know what? Particularly, I heard the guy out here today was saying that Apple always brings the products out early, but to me that didn't connect. I know Microsoft does. To me, when he brought products out, they were incredible. Do you know what I mean?
For sure.
Now. Maps wouldn't have been a big deal 5 or 10 years ago.
Yeah.
But they're a big deal now because of the advertising.
Yeah.
When people are walking around saying, "Hey, stop right here."
Yeah.
Well, guess what? I want to stop and have a pizza. Well, all of a sudden, oh my God, hold it! I'm going into a sushi place.
Yeah.
And that'd be great for him.
It would be.
He'd be saying, give me, that's a beautiful thing, man.
Right.
I only want sushi. I know. I love it. Perfect. No doubt.
Now, we were going to take a look at, for Rick, we were going to look at...
FXE?
Yeah, FD, not FedEx.
FXE, I think he wanted. FCI, the FXE in correlation to the DAX, I think he was saying. So the FXE is the euro currency. That's what I think he was looking at.
Okay. Thought we maybe it was FCX, but that's cool.
Yeah, I think that.
Yeah, but what we did show on the DAX that it had volume on Friday as it was taking out a swing point.
It did.
Right. So that's kind of interesting. Huh?
No, it's really interesting, man. I mean, it's like, okay, so let me just we know DAX index So I got a correlation up here. Yeah, this isn't too correlated, though.
Yeah.
It's all over the place.
Yeah.
So the FXE, which is the euro versus the DAX, is all over the place. There's no doubt about it. This morning you get the rhetoric is out there again this morning. I mean, that's you get Merkel saying, hey, the guy from Spain, Rojo, there is no way he's going to go and say, hey, listen, we need your help. It's not going to happen. He's going up for election. They've already pushed enough bonds out. Well, like the 27th of October is going to be here quicker than they think, though.
Okay.
That's what's going.
And they needed about
billions and billions and billions.
Okay. Hundreds of billions.
Yeah.
You think? Okay.
Yeah. I think it's 262 billion.
Okay.
Yeah. I mean, it's an amazing.
And he's just looking to be able to roll them over, and
he's looking to roll them over. He's looking to get elected
short term. Yeah.
Yeah. So the reason that they won't go to the European Union, folks, is that they're going to put them on more shackles. That's what it really comes down to. And the shackles, just so you understand how this works, it's not a private shackle. Most of these governments, most of these countries, everyone works for the government. So immediately it's like cut.
Yeah.
And of course, then you have big problems, because then they won't go vote for you. Then people don't have any money. Then they're used to having, basically being on the public dole. It's a big problem.
Yeah.
So.
Yeah. So if we take a look at the DAX, so it had nice volume. It took out a swing point from September the 14th, closed over it even today as it's pulling back. What are you looking at this thing going into? Just really Friday?
Well, not really.
Yeah.
See, this is what you have. Now, the last 2 weeks, folks, we had some real volume. The DAX did 74, got to 74.46 with some juice, 900 million. Did it again, 74.48 with 900 million. That's saying to me wants to tag it. Now up at these highs, there's nothing there. So that's all the last highs in 2011.
You're on a weekly chart.
But now
on the weekly chart, which is cool.
But now this is only 2011. Now I'll show you what's going to happen. This is where the change comes in.
Yeah.
If we bring this back, and
you get up to 2008.
Yeah, a different ballgame.
Yeah.
That's see what you have is this is that. In 2008, we're talking about 1.7 billion, 1 billion, but still at 1 billion at 900 million coming in.
Yeah, that's pretty good. That's good correlation.
That's a good correlation coming in. So that's saying, hey, it wants to tag the 2011 area, and we'll see whether it can get any, does it fall apart?
Yeah.
Trying to get there. What does happen is this, is that when they're pushing with volume like this, though, they want to tag them, man. They want to tag them. Steve Rhodes, Tom O'Brien, you stay right there, folks. And don't forget, let's see, it's Monday. We're going to be going to Basil Chapman, Larry Pesavento. Larry's back. He's got his life jacket. Darryl Martin, David White, Ken Shreve, and myself. You stay right there, folks. We'll come right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigers growling and prowling with us out here. Right now, we get the Dow down 35, NASDAQ off 18, S&Ps are off 2.5. Yeah. Wow, what a down market. What's that?
No.
Oh, man, I'm telling you.
I talk about the bulls and bears that come to work, the sign makers, and they're. Hey, today's got Larry coming back. It's perfect. Today's a 3 planetary index date out there. Still no movement, though.
Still no movement. But hey, you know what? Oh, man, we're getting close to that 29th. This full moon coming up on the 29th is a nasty moon.
Oh, is it?
Yeah.
Oh, yeah. You keep saying that. So
I've got, a bunch of different emails in.
Okay.
And this just has to do with what the setup is. We got to have you and Larry work on this thing because whatever the setup is,
must be some other planetary alignments.
There's a bunch of squaring going on. A bunch of this stuff. I haven't really wrapped my head around it. But I know every time that I hear that planets are going to square each other, I know enough that okay, man, you better back down a little and be an observer, okay?
Yeah.
Because the fireworks, come off.
The thing is, those planets, though, the problem is that part of Uncle Ben's buying of the mortgage-backed securities, he's got the mortgage-backed securities on the moon. He bought that one.
Oh, yeah.
That's on the Fed's books,
Hey, listen, man, I hope he keeps buying them. He's going to be buying them off me all day long. I think that's a beautiful thing. Keep those rates down.
Now on Friday,
yes,
some big announcements, past Friday, big announcements out there about folks wanting to come into Tampa and compete with you in the Tiger Real Estate Fund.
Yeah, Blackstone. Blackstone's coming in with $1 billion, folks.
Yeah.
Yep. No doubt. Competition is good though.
Yeah. Well, look, like you've been
we'll sell them plenty of houses.
Alerting people. Here's where you put your money to work.
No,
in that segment of the business.
There's no doubt. When you can, the bottom line is that what I did today for all you folks that have already are accredited investors and you come over to the website, you're going to get a video. I did a 10-minute video this morning with real numbers. For the past 5 months, and when you see it, you just blow your mind. I mean, because the house,
it is, and it's fast moving. It is really,
and now I get the numbers,
really
consistent numbers over the course of 5 months.
Yeah,
and when I'm talking about factual numbers, what they've got sold at, folks, at the courthouse steps, and because many of these have already got moved out again, what they've sold at again.
Right.
Huge, absolutely huge. So you can expect that. Sometime probably late this afternoon, but I did it this morning.
Yeah. Now, folks that are accredited investors that go over to the homepage tfnn.com.
Yep.
The probably best place to start is with your special report out there. The white paper.
You can hit right under breaking news. You hit the white paper, and then you can read. Everyone can read that. And if you happen to be an accredited investor, then just hit the. Opt in, and we'll be happy to send you out what we're doing.
That's cool.
And as you're over there, of course, don't forget to get the candlesticks, the silent signals, the speed of trust report.
Oh, there's some cool things that I've shared in there with folks, So for those people that are experienced, they absolutely need to go over there. And for those folks that are just kind of new and they listen to us and not really sure where to start, it's really a good place just to start your trading session.
No, it is.
You start your technical analysis, because this technical analysis, that's the most fundamental thing out there.
There's no doubt about it.
It's so cool what you have done, what you've created out here, what you have provided for everybody that's in the listening audience.
Well, we appreciate all you tigers and tigresses growling and prowling with us out here. There's no doubt about it. You know what the amazing part, folks, is that we're doing 9 hours a day right now, and we're going to even get better at this, I mean, because what ends up, it's a time deal. Do you know what I mean? It takes so much time to do everything, but, once you get the foundation laid, which we have a really solid foundation cooking. You stay right there, folks. We're going up to Newton, Massachusetts, Basil Chapman, Tucson, Arizona, Larry, Dallas, Texas, Darryl Martin, David White back here, Ken Shreve in California. And back here, well, hey, we get some horses.
We do.
Have a great one, folks. Have a safe one.